Hi, in this tutorial I'll be explaining how Tradyse works behind the scenes and also show you how you can use Tradyse in conjunction with your existing trading strategy or develop a trading strategy around Tradyse. Okay? Now, before getting into details of everything else, I need to first address the question, which is, how does Tradyse know what the market trend is? Now, it is extremely difficult for me to explain this without sounding super technical, but I'll try to explain it in the most basic way possible. In a nutshell, the AI engine does two things. One, it scans the market using several different trading strategies pretty much every single second to determine a market bias. But over and above that, it learns of the changes that are happening on the market over time and takes into consideration those changes when making a decision on the bias. That way, it always knows when a change is about to happen and it takes that into consideration. Okay? Now, we say that we provide you with the market trends in real time, but you don't necessarily get the updates in real time, and I'll explain why. If we had to provide you with updates in real time, considering that we are doing analysis of data pretty much every single second, you would be getting notified at least 5,000 times within a day from us, right? And in order to mitigate that, we basically broke down and figured out that the best way to provide you with data is to provide you with data in ranges, right? And I'll explain. You get data in ranges of time and in price. I'll basically explain time now, then I'll explain price later, okay? Now, in time, within a 24-hour cycle or 24-hour day, and Tradyse uses plus 2 GMT time, by the way, and you can always do the conversions to figure out what the time is, what these times are within your time zone, okay? But within a day, there are two alerts, one before noon and one after noon, right? Now, that doesn't mean that this data is only valid within those 12 hours. That's not really the case, right? What you receive before noon or before the afternoon is what was taken into consideration from the midnight of this day of the plus 2 GMT, but it's also taken into consideration what happened prior to that, right? So it's not just applicable for this day only. It also takes into consideration what happened before that, okay? Now, this is time, before noon, afternoon, right? Now, why is ranges important? Remember, the market moves in ranges. If the market took 6 months to go up, it'll take more or less 3 to 6 months to come down. So this gives you enough time to make decisions, and we are aware that people's trading patterns are very different. People have lives. People are not sitting in front of a computer screen 24/7. So if we had to give you updates in real time, you will need to be in front of your screen pretty much all the time to adapt to those changes, okay? So that's that. In terms of times where you should expect alerts, anywhere between 7 to 8 a.m. plus 2 GMT. And then the second sessions, which are your evening sessions, for lack of a better expression, they come from 2 to 2:30 in the afternoons, okay? So that's the ranges in time. Now, the ranges in price, I'll use this example, is how we have possible targets in the direction that our bias is going for, so in this scenario, bullish, and then we offer possible reversals in the opposite direction. And if you see here, you'll see that little, afternoon sign, and if you click this, you'll see, let me click this rather, there we go, you'll see the sun, right, which basically alludes to the AM session, right, this, okay? So now you might be wondering, okay, what do you mean by ranges? I'll show you. So let's click this. This is the 5th of November. I'll come to market chart and we'll go to November 4th, and this is November 5th, right? I'll just go before this time. And what I'll do is I'll just plot these prices for you, okay? So this is the first possible target. I'll just draw this, paste that there, and then I'll draw another line. I'll just drop it anywhere there, come back here, copy the second possible target, copy that, settings, by coordinates, paste it there, and yeah, we'll just keep it here, right? And then we'll go to the possible reversals, because remember, because the bias is bullish doesn't necessarily mean that you need to buy whatever that instrument is. You might be looking for a sell opportunity, right? So we want to take into consideration both. So let's say that, and then let's take this possible target, then we draw it on the chart, we'll do this, right, and do that, okay? This was the morning or this afternoon session, right? So let's go past midday, which will be more or less here. I'll just draw a vertical line from 12, right? So basically, this is applicable from this vertical line going to the right, okay? Now, as you can see, the market did respect these. As you can see, it literally went to the possible targets, then went to the possible targets, the possible reversals, okay? Regardless of what your intentions were to trade, you could have basically went to either. But the point here is, these are ranges that you can take into consideration, right? When the data was sent to you or provided, or the alerts were basically sent to you, the market was in between, okay? So it was not far up or far down, it was in between, giving you time to make a decision based on your trading strategy to where it could possibly go. And should it take X amount of candles or X amount of days to go up, it'll take more or less the same amount of time to come down. By the time the next alert comes, it gave you enough time to prepare for the next alerts, and then those alerts will give you a price range and a time range before the next one comes. So before the next alert comes, price would have gone to either or the positive, the possible targets or the possible reversals, right? So that's what ranges means. So range in terms of time, we divide the day in two, and we divide the prices in two. Possible targets, possible reversals. And then you just make a decision either way, okay? So that's essentially how Tradyse works in a nutshell. Giving you enough time to make decisions. You want to buy it, you want to sell, whatever you want to do, that's pretty up to you. So in terms of trading strategies, we tell you what the market bias is, right? And we provide you with a range of possible targets and possible reversals. You can essentially go ahead and build a trading strategy using this information. So you could have a trading strategy whereby, let's say, for example, every time the market is bullish, right? And let's say you know what the possible targets is. All you could be doing is just waiting to see a breakout, a trend line breakout, right? I'll just draw a trend line from any data points, right? Let's say, for example, from there to there. The market broke out here. This was about 8:30 in the morning. Then you could have just literally waited for the breakout and you take the trade in the direction of the bias, which is bullish, meaning going up, to whatever the possible targets are. So let me just remove these rectangles and just remove this. You could literally just sit and wait and say, okay, the market bias, Tradyse says the market bias is bullish, and these are the possible targets. I will highlight those possible targets. Then whenever a market breakout happens in that direction, I'll just take a buy trade, put a stop loss wherever, let's say here, and I will target the possible targets, right? And in this scenario, you would have basically been profitable and made 3% or whatever your risk to reward strategy is. Okay, very simple. Or should you say, I like trading the reversals, you could literally still apply the same trading strategy, which is just trend lines. You just draw this and then take that into account. And sorry, let me draw this properly, right? And you could literally just see, okay, the market is going to break out. But there's a breakout that happened a bit earlier than that, from here to there. Let's just take that into account, right? You could literally just take the sells, let's switch this to shorts. You would sell whenever the market breaks out in the opposite direction, and your targets are the possible reversals, right? Regardless of what you wanted to trade, you would have still made profit. Very simple, very straightforward. Okay, so this is just one of the millions of ways you could use Tradyse, but this is one of the easiest ways we literally tell everybody to start off with is just trade what you know or what's easier, but at least you know where the market could possibly go to and where the market is, right? And what's even cooler is because of the time ranges, meaning, as I explained in the previous slide, because you know that, hey, I got 12 hours with these possible targets. The market should go to either one of them, possibly within 12 hours. Then in the next 12 hours, the market will go to either one of these targets within the next 12 hours. When those are done, there's a new set of targets for the next 12 hours. So you're progressing with the market 12 hours at a time and targets at a time. So it's a bit easier to trade when you know that these are the possible ranges that you're going with day by day, 12 hour by 12 hour. That way, you're not just placing a trade and just crossing fingers hoping that one of these days it reaches those targets, right? So for those that are intraday trading, this is like the best way you could ever trade. And it puts you at ease knowing that, hey, if within the next 12 hours or more, the market doesn't go to either of these ranges, then there's something wrong, right? And that something wrong could be the market is moving sideways, okay? Which you would see an indication here, it'll say instead of trending, it'll say sideways. Now, that doesn't necessarily always mean a bad thing, okay? Because trading sideways, basically, if I had to find an example, would be the market more or less being stuck in a box, right? And I'll use this example here, right? It's not going too far up, it's not going too far down, it's just stuck in a box, right? And if this is the case, you'll be notified. The alert will say sideways, right? And then what you can do is you can either not trade, which some people do, but then there's a large portion of people that prefer trading sideways because the market is literally moving in a box. So it can only go so far up, it can only go so far down, okay? So these are all different ways you can play around with this, knowing that, hey, I have 12 hours and I have two price ranges. You can only go this far up or this far down. Now, let me correct that. The possible targets and possible reversals aren't the furthest or the only targets that the market could go to. As you can see in this example, this was the furthest reversal, but it continued going further down. But the idea is within this time frame, these are good points to take into consideration. What happens after that is a completely different conversation, right? And just as a tip as a trader, trade with what you know. What is the unknown is the unknown. It's none of your business. It's not, as my mentor always used to say, it's not your father's market. Trade with what you know, what you see, and make decisions based on that. And that's what Tradyse is purely built on. Providing with information that you can use to make smarter decisions with your trading, okay? I hope this simplified how Tradyse works and basically inspired you with something that could, number one, boost your trading confidence because you know pretty much more or less what's going to happen, right? But over and above that, all the tools included in Tradyse, not only the alerts or the backtesting, will help you go back in time, practice and put these things into play to perfect your trading strategy and basically become a better trader over time. All right. So I hope that was useful. If you have any questions, feel free to, drop us a text and we'll help you. And yeah, you can basically use this to develop your trading strategy and yeah, become a better trader.